Top of the morning, friends and fellow traders. This is Doug Campbell with Right Way Options, coming to you with the morning market preparation video for July 10th, 2018. So my goodness, those bulls grabbed a hold yesterday and really worked together hard, pushing us through this resistance level, and really one of the best things, pushing us above that 50-day moving average, giving us an opportunity to really start seeing some bullishness coming into the market. Now, let's keep in mind that why this pullback had been created, and that was the jitters over trade war. And let's also remember that nothing has changed on that trade war. We just got this bullish urge to move higher, and we've moved very, very strongly and sharply in that direction. Keep in mind that in the last 3 days, the Dow has rallied over 575 points, meaning that we could be actually reaching a point where we're getting a little bit overextended. Remember, it's not unlikely, not abnormal, I should say, that once we break through a resistance level, we break above the 50-day moving average, that a consolidation or a pullback is the next thing to occur. But having said that, we are above this support area. We are below this resistance area. So this morning we're seeing the futures pushing higher. We're looking for another gap up open. We could certainly very easily extend this run even higher. Just be careful not to chase it, because we're getting close to that place where we should expect some kind of a pullback or a consolidation. Let's take a look at the SPY. SPY moved up nicely. 3 days up in this move, moved up incredibly strong. And once again, we're approaching this significant resistance. So here's the thing. If you're not already in this move, there is such a thing as, it's called the fear of missing out. And the fear of missing out is a very powerful emotion. We see these moves and the market just relentlessly going up, and you say, oh my gosh, I'm missing out. I got to get in. And invariably what happens is, if you jump into a rally late, you're likely to suffer the pullback. So be really careful about not chasing this rally. Remember, a trend is established and only established. Remember, we made a lower low here, breaking support in this trend. So the only way a trend can be reestablished is we need to establish a new higher low. So we move down, we move up, we pull back, and right here's where the trend begins. Now, I'm not suggesting in any way, shape, or form that I'm trying to predict it's going to happen over here. Just that when a trend works, that's exactly what happens. We pull back, we get that trend. So remember, we don't have to chase into this. We can wait for the next entry into the trade. So be careful. If you're not in this, don't let that fear of missing out push you into making a bad decision that could end up being a very painful lesson that you don't want to have to experience. Trust me on that, because I've done it so many times. Let's take a look at the Qs. The Qs, very, very strong. We're pushing up here this morning, very, very close to an all-time high. So let's keep that in mind, that as we push up here, there's a resistance high here that can often find profit takers and sellers coming into play. If the bulls can push on through, the next logical thing will be a test of that support. So keep that in mind as we approach that resistance. And IWM is doing the same thing, pushing up toward that all-time high, showing some tremendous strength. So for some reason, we have decided that the trade war thing is nothing to worry about all of a sudden, and that's okay with me. I'm more than happy to do that, but let's also keep in mind that nothing has really changed. Now, we do have earnings coming, and that is certainly probably moving the market around a little bit. There's a lot of anticipation about this quarter's earnings. I think a lot of folks are expecting really good results. So we'll have to watch that closely, because what we could be seeing is a little bit of rally in anticipation of earnings season beginning. Let's take a look at the VIX. Now the VIX is showing us that fear just dropped out of, just dropped out of the market. And so we've moved down very, very sharply. We're moving down toward, look at this, we're at a 12 handle here on the VIX. That means extreme confidence in the market at this point, a clear failure of this support. And as we move down, there's this long-term trend line here. I think the next logical thing for the VIX is that it moves down in here to test that support area. So we'll see what happens there. But right now, no fear in the market. However, here's where my concern comes in. If we look at T2122, T2122 4-week new high, new low ratio. Whoop. I've got to get to the right chart. There we go. Apologize about that. On this chart, if you look at this chart, you can see that we have reached up here to that bearish reversal zone. And this is nothing I predict or anything like that. This is just the consistency of this indicator is amazing. And so once we reach up here, we have to take a little bit of caution. Now, please keep in mind, just because we're up here doesn't mean we can't go a little higher, and it also doesn't mean that we can't stay up here for a while. So this doesn't necessarily mean just an immediate reversal is going to take place, only that we should be watchful of it, and we should be careful not to chase into the market when we're up here in this zone. So I'm going to be watching for a little bit of pullback. I'm going to be a little bit more focused today on watching for those clues of selling or profit taking, and I will be moving my stops up on my winning positions and looking to take profits if I do see that market start to falter, and that could happen today, tomorrow, anytime. This, there's no set time for this, and this is not a prediction in any way, shape, or form that that's going to happen this morning. Let's take a look at the economic calendar here this morning. If we look at the economic calendar, not a whole lot to move this market around except this jobs opening number. Now that's expected to come in extremely strong. As a matter of fact, if it comes in at this number, it will be hitting a 20-year record where there's actually more jobs open than there are people looking for jobs. So tremendous strength labor demand in the U.S. We just have this labor is just, everyone seems to be looking for an employee to fill positions. Just a huge demand for labor, and that shows a lot of strength in our economy. So economy-wise, we're looking really good. Keep in mind, that's the only report today that could likely move the market today. We have the NFIB Small Business Optimism that came out early this morning, Red Book, and a couple bond auctions, but they're not expected to move the market around much at all. On the earnings calendar, PepsiCo reported earnings early this morning, and you can see they're gapping up, showing some strength on a good earnings report. And that's among 15 other companies that will be reporting earnings today. So keep in mind, as we approach this earnings season, make sure you're checking those earnings dates. If you use TC2000, I highly recommend you place that earnings date right up here in your title bar, like I've done here. It doesn't have to be blown up or doesn't have to be highlighted like it is on mine, but I recommend you have that and that you're always paying attention to earnings dates before you enter positions, okay? Before you enter, and if you're holding positions moving into an earnings date, make sure you have a plan how you're going to handle the reaction to that earnings. So with that, everyone, hey, I want to wish you all a fantastic day. I want to wish you all great profits. And if this is the first time you've seen these videos, please do me a favor. Click that subscribe button on YouTube. Follow me button on Facebook. Click those thumbs up buttons and drop a comment. I really do appreciate it. And everyone, always feel free to share this video with any friends and family that might find it helpful. Again, I want to wish you all a fantastic day, and we'll see you all right back here bright and early Wednesday morning. Take care, everyone.